Larry Fink, CEO of Blackrock, the largest asset manager in the world, went from saying he didn't see much demand in the digital asset space in July 2021 to making plans to offer crypto trading for clients 8 months later. Let's talk more about the changing approach of legacy financial institutions towards digital assets and how they are moving markets with Cynthia Wu, founding partner at Matrixport. Great to have you with us, Cynthia.
Thank you for having me, Justin.
Now, Cynthia, we're seeing a definite shift in institutional interest in crypto offerings. JP Morgan's Jamie Dimon just told shareholders that DeFi and blockchain are real, and the bank is leading this innovation, quite a change from a stance from October of last year when he said Bitcoin is worthless. What's your take?
Jamie Dimon has expressed skepticism in the value of Bitcoin several times in public. He has made positive comments on blockchain technologies and decentralized finance in general, and said there are real use cases blockchain can bring to improve the current way of contracts, data ownerships, and payments. In the crypto market, since last year, we have been seeing institutional adoptions continues and accelerates, despite of the recent market correction. The traditional financial world is looking for alpha and portfolio diversification, and crypto has established itself as a winner in these dimensions.
And speaking of Bitcoin, the OG of the crypto world is the one attracting the most institutional interest and has moved smartly from the lows of 34,000 we've seen earlier this year. And have we found a base here? What's your outlook on BTC at Matrixport?
From the macro perspective, we still believe there are a lot of uncertainties going forward. The rising rate environment in the US remain a very important test for cryptocurrencies, with 190 bips rate hike since the beginning of this year. And also in the most recent March FOMC meeting, Fed signals quantitative tightening. However, Bitcoin, we believe it's a unique asset. It offers important portfolio diversification benefits and provides a hedge against inflation and geopolitical risk. And these factors make it a distinct asset from equities and bonds. We have also seen several major public buyers in the market that worth watching. Luna Foundation Guards plans to add a total of $3 billion worth of Bitcoin to support the UST reserve, and in recent weeks already bought hundreds of millions, which has been a major buying force in Bitcoin. So my view is that Bitcoin price is very likely to stay range bound in the rest of the year between 35K to 65K.
With some traditional institutions still hesitant to get their feet wet with digital assets, how has the DeFi world developed to, in essence, make those institutions more comfortable with the product offerings?
Right. Accessing DeFi in a secure and controlled manner has always been a pain point for institutions. At the same time, the future is becoming more of a multi-chain world, which means the DeFi protocols are not only just on Ethereum, but also on other major layer 2s and EVM compatible chains, such as Polygon, Arbitrum, Avalanche. So this brings additional layer of complexity and risks to institutions when they access DeFi. In the past 6 months, we have been focusing relentlessly on resolving this pain point by launching a product feature called the DeFi Connector. We have seen a strong institutional interest and demand for this product, and this is a strong signal, in my opinion, for institutional adoption of DeFi.
So when we talk about institutional positions in crypto and DeFi, what are the pockets that we are seeing the most traction in?
We have seen the traction mainly coming from 3 groups of clients. The first group is private wealth client, so family offices and high net worth individuals looking for yield and diversification of their portfolios. The second basket would be hedge funds, and they are either run by experienced traditional finance veterans or spin-offs or crypto arm of established hedge fund. They are active in both centralized exchange and DeFi. And lastly, the third group of traction, I would say it's asset managers. Even though this group are regulated entities, they tend to take a more measured approach towards crypto assets. So the typical approach they take is that they will partner with crypto native firms to offer income fund or structured notes to their users.
Thank you so much for joining us today, Cynthia.
Thanks for the questions.